Hello, my name is Maurice Washington. I want to welcome everybody to another episode of Executive Talk. Those who are watching live or those who are listening later on our podcast, thank you so much for joining us today. Today's topic is reasonable salary, question mark. What does that mean to you? I know as a business owner, you probably have your own idea as to what a reasonable salary is, but we're going to talk about it from a different tax perspective. And with me today is we have Victoria Smith, owner and operator of Victory Accounting with me. So let's go ahead and bring her to the stage. How you doing,
Good
Victoria?
morning. Good. How are you?
I'm doing well. Nice to see you. How's business been?
It's going great. How about yours?
It's going great. I know right now is your busy season, right? I know we got a couple of deadlines coming up. What's going on?
Right. So business taxes are due September 15th. So we have about 3 weeks till those have to be done. And then personal taxes, if you filed an extension, are due October 15th. So trying to get all of those last minute items wrapped up.
That's it. Everybody get on the ball. It's time to get them done. Get ready for next year, right?
Correct.
All right. So we don't want to start. I know people aren't excited about it, but it is what it is. We have to let people know what time of the day it is. But ultimately, let's talk about reasonable salary. This is a new big deal. I know it probably has been behind the scenes for quite some time, but it's becoming more prevalent and it's going to be more mainstream, I'm assuming, right?
Right. So, reasonable salaries are something that's been around since S corps were created, and so it is something that the IRS does look at. With the pandemic, the IRS has been behind and not doing so much auditing and reviewing of information. But as they, got all these new funds, they're going to be start ramping up.
Okay. And speaking of that, a lot of change, and I know people don't like to talk about it, but we do actually need to understand there is a new norm in how business is being done. And so, even specifically with the IRS, what is triggering all this movement?
Right. So with the pandemic, they gave out so much funding to businesses that it's kind of emptied their pockets. And so the IRS and the government is looking to kind of refill some of those funds that they've given away. And reasonable comp audits are definitely going to be on the rise because they're one of the simpler audits that the IRS can do that has a lot of penalties and fees included with it. So it's easy for them to do it. And the rewards for, doing the audit and getting all the penalties and fees are much greater.
Gotcha. All right. Well, let's go ahead and take it this direction. I know there's a few entity types, and and now with that being said, with all the entity types, which one does it affect? And just to take us down the pathway, how many different entity types are there for people
Correct.
to participate in?
Yeah, so there's the sole proprietor, or you can be a sole LLC. Usually they file a 1040. If you have more than one business owner, you're normally a partnership unless you elect something else. So then you have to file a 1065. And then you can be a corporation, you can be a C corporation or an S corporation. One of the biggest differences, if you're a C corporation and you take money out of the business, it's considered a dividend. Whereas if you take money out of the business as an S corp owner, it's considered a distribution.
Okay. And so I would think with a partnership, and you're saying with a partnership, this doesn't play a role with reasonable salary. I mean, considering there's two different partners or however many partners within the business, you would think this would apply at that time, right?
Right. So you can be a partnership. You can have more than one business owner and elect to be an S corp, and then you break it down that way. So there can be multiple partners in an S corp, but if you don't make that election, then you're automatically considered a partnership.
Got it. Okay.
Right.
Well, let's take me down this path as well. When it comes to how is reasonable compensation determined, talk to us about that. What does that look like?
Yeah. So in an S corp, you have to have a reasonable salary, and the way that the IRS determines that is they look at your profession as a whole. And then they take pretty much the average and they kind of look at what the average professional in your industry is making. And that's what they consider a reasonable salary. So if you're not taking what other professionals are taking in salary, then the IRS is more likely to audit you.
All right. And that's where it gets sticky. This is where I feel like business owners have challenges, for lack of better terms, with the IRS. Is as a business owner, you feel like whatever I pay myself for that year is reasonable, right? If
Right.
I decide to pay myself 50,000 and just kind of lowball that number, then that's what I feel like is important.
Correct.
That is so that feeling is no longer going to be able to fly going forward. Is that what you're telling us?
Yeah. So if the IRS audits you, they're going to look at what type of paperwork you have to back up the reason why you're paying yourself that salary. If you don't have any paperwork or any reasonable explanations and some sort of research on why you're paying yourself that salary, then they're going to turn around and say, no, this is what you should actually be paying yourself. And that can have a lot of tax implications on you.
Okay. This reminds me, I'm going to take us backwards for a little bit. We had the conversation regarding banks. And
Correct.
in that conversation, when we talked about banks and we were talking about getting funded, it's interesting because this same reasonable salary is also what the banks are looking for as a reasonable salary. Am I making the association correct?
Yeah, so banks want to see that you're paying yourself payroll.
Yeah.
It's an easier way for them to actually view your income rather than looking at your business and see what sort of draws you're taking out of it. So it's just easier to prove your income when you're doing payroll.
Okay. All right.
Mhm.
And you can kind of shoot yourself in the foot, if you will, if you're not paying yourself enough, right?
Correct.
Even in that circumstance. Okay. So also last month we did a show and we talked about just how 401ks investing and preparing for your future. You can also shoot yourself in the foot by not paying yourself that reasonable salary in the long term.
Right. Right. Because you're hurting yourself in your Social Security, your 401k. There's multiple different things that this reasonable salary helps you with and feeds into. So by actually complying with the IRS, you're really actually helping yourself. They're just trying to make sure everybody's following the rules and making sure that they're getting their fair share of your income.
Okay. That's
Yeah.
true. All right. So with that, so with the IRS and state finds out that you're not paying yourself a reasonable salary, where are we headed down this pathway going forward, looking to 2024 in the future?
Right. So when you file your business tax return for an S Corp, there's actually a separate line item on your tax return just for your individual salary as the business owner. So if you're not paying yourself a reasonable salary, that's automatically going to show up in their system and they can make it flag it. So they'll take your tax return compared to other individuals in your same industry, and they're already going to know before they ever send you the paperwork that you're not paying yourself a reasonable salary. So then if they do determine after they've audited you that that you haven't paid yourself a reasonable salary, what they will then do is move any distributions that you have, and they can move all of it or part of it and change it into payroll.
Okay.
So what happens then, it triggers a multiple of different things for the individual. They then have to redo all of their payroll tax forms, which means that they're going to owe additional funds.
Right.
Then they have to redo their business tax return, which of course is going to cost them additional money. And then they're going to have to redo their personal tax return, which because of their higher wages is going to increase their taxes. And then they're going to pay penalties and fines on that as well. So there's just a multitude of penalties and fines that come out of this sort of change in your payroll that really can hurt a business.
I got you. So it's really, and here's the thing, Victoria, when I think about what you're saying, there is a certain time frame where I know it's that December, January timeframe when your accountant has talked to you and suggested maybe you switch your entity to an S Corp for tax savings and purposes. Then when you come into the year and you hear about reasonable salary and you're not prepared for it, does this make a lot of business owners a little bit nervous, or is there some swift adjustments that they should start taking right now?
Right. So the best thing you could do is get a reasonable salary evaluation and kind of figure out where you're supposed to be as far as your industry is concerned. We wear so many different hats as business owners. If you have a physical location, you might be taking out the trash and cleaning the office, once a week. Or, if you're just running everything on your own, you're your service rep, invoice writer, you're doing all of these other things just to keep your business going. And so those can all be broke down to help make your reasonable salary.
Okay. All right. Well, then let's talk about this right here. Are these audits going to increase? Do you feel like it's going to be an aggressive audit move on the IRS going forward to start to recoup this cash or to really address this reasonable salary?
Yeah, I think it is going to be more on the top of the IRS's list. I think that they're moving to make these audits happen more often just because it is easy for them to kind of know ahead of time before they even send you the letter in the mail if you're going to owe them penalties and fees by their calculations. So it's an easier audit for them to do. It doesn't take them a whole lot of time or cost them a whole lot of funds. But the rewards for them, if they do find that you're not paying yourself a reasonable salary, can be great.
Got it. All right. Well, then here's the best option right now, because obviously right now, business owners, the message is start making the change right now, because this is an important shift. And I want you to take us through this pathway of what a reasonable salary comp looks like.
Right. So here I have a software that will help figure out what your reasonable salary is. Here we have a electrician who is running everything on his own. He lives out of Broomfield County. So in this audit, we can designate it directly to your area so that we get a more accurate feel of what your salary should be. The IRS can only make you work 40 hours a week. That's the maximum that they can allot to you. So you're going to see this at 40 hours a week. We all know that we're working more like 70, 80 hours a week, but
Right.
At least the IRS can only allot to us 40.
Okay, and let me pause you right there, Victoria. I apologize. Your Broomfield, so this Broomfield County, why is that such a significant, statement right there?
Right, because different areas pay differently based on where you're located. Some places have higher minimum wages than others. Excuse me.
Are you okay?
Some places have higher minimum wages than others. So this can be completely customized to your area, your state, everything like that. So we can have the most accurate numbers for where you're actually living, because that does change based on where you're at.
Okay. All right. Well, keep on taking us down the path.
All right. So after you do it, it comes up with this great graph. It does your time. So when I went through and did this audit, I estimated that the amount of time that he's spending actually doing electrical work is about 61% of his time. 8% of his time is spent doing management and supervision. 10% of his time is doing accounting, financing, and bookkeeping. 13% of his time is done doing advertising. And then 8% of his time is done doing administrative, secretarial, and clerical work. So then when we look at this bottom one, the same colors are indicated. So his compensation based on those different items, 60% of his compensation is based on the electrical work. But the numbers that get much more indicated here in the percentages is he's getting paid a much higher wage for his management and supervision work that he's doing. It's a lot less for the accounting work, about the same for advertisement, and then less for his administrative work.
Okay. So this is interesting. I'm gonna bring this up right here. So when you think about this moment here, as a solopreneur, most business owners are used to doing everything in their business if they don't have employees, just to keep the ship
Correct.
going. But this is suggesting that all those categories in which you're doing within your business to keep the ship going as a solopreneur, there's actual cost, there's actual fee. I mean, a cost that actually goes associated with all those administrative duties that you're doing, right?
Right. And the IRS will also break this down as well and say, well, we think you're spending this much time doing this and this much time doing that. So the IRS can also come in and break all of this down and say that they think that you're spending this much time doing these different activities. So that's something else that they consider. So if we go ahead and roll all that together and make those considerations when we do this, it helps you have proof of why you're paying yourself this reasonable salary if you ever were to get audited.
Okay. All right. Well, keep on. Yeah, this is good. Show us this breakdown.
Right. So as doing the task of being an electrician with high proficiency, because, we all have different levels of where we're at with different job positions within our companies. So being high proficiency as an electrician with the 61% time, his hourly wage would be $39.92. And that would be if he were to hire anybody outside of the company. That's what the average salary would be. Excuse me. Which makes his annual wages $50,650. Okay. So out of that $84,000, this is a good chunk of that amount of reasonable salary that he's making.
Gotcha.
The next one is his general operations manager. He's above average in that. And then his hourly wage would be $92.14, which of his annual wages would make up $15,332. Doing the billing and invoicing, because he's doing everything himself.
Right.
He's spending about 10% of his time, which if he were to hire somebody, it would cost him about $22.42 to do that. So right. Their annual wage would be $4,663.
Gotcha.
Being the sales rep, running around and getting jobs and everything, he's spending about 13% of his time doing that. At $35.01 an hour, his annual wages would be $9,467 for that portion of it.
Got it. And this is a good moment for us to pause. I know. So when I look at this and I think about being a solopreneur, you obviously sometimes as a solopreneur you think, oh well, the way that I can cut costs, extra expenditures, is I'll just do all this work myself.
Correct.
So the breakdown here is you're actually doing you're actually rolling all your duties into one, and ultimately they all have a price associated with them. And so this is actually providing a huge breakdown and a breakthrough for a business owner to see what's happening with the time spent in this business, his or her business, right?
Right. So, that's the one thing that we can't get more of is our time. So how you're spending your time running your business, yes, you may be saving money by not having somebody do these maybe positions that you could outsource, but what could you be doing with that time if you weren't having to do all of this other work? Like, could you be out getting more jobs? You could be doing more work, which is at a higher wage. So yes, you may be saving time by doing everything yourself, but what are you losing? So this is also a good way to evaluate where are we at? Like, what am I doing every day that I could maybe outsource some of it, even if it's like 10, 15 hours a week,
right? And
having somebody help me. And then I could be spending that time making more money in the long run.
Okay. Well, take us down another scenario. This is good.
Okay. Yes. So
So we have a dentist here. Reasonable. Okay, 172,000. Okay.
Yes.
So this one, this one is a brick and mortar, right?
Right. So we're looking at a dentist who has a physical location, of course, because he has to see patients.
Sure.
So his reasonable compensation salary is estimated to be $172,622. I did this one out of Denver County. So as you can see in his pie chart, his time, he's spending about 50% of his time actually being a dentist and doing work with clients. 17% of that time he's spending managing employees. Usually a dentist has multiple employees that they're working with. They're spending about 3% of the time doing computer and information technology. We all know that computers don't always like to work the way that we would like to, and dentists do have a lot of equipment. So I'm sure there's some time spent dealing with computer issues.
For sure.
Then you're also your human resources person. So you're taking care of making sure your employees are doing well. You may also be doing some training with employees to make sure that everybody is keeping up with what is going on in the dental community and anything new that's coming along that's helping make their jobs easier. They're probably spending some time doing accounting, maybe running their payroll and, doing a little bit of checking on, expenses, paying bills. And then they're probably spending some time doing janitorial work. Maybe the trash needs taken out. We need to clean this room. The lobby needs to be vacuumed. There's just different things that they're going to be doing around their own office.
Got it.
So of that amount of time that they're spending, 70% of their compensation is doing the dental work. 19% of their compensation is doing the management. 1% is doing the computer and information technology. 6% is spent doing the human resources and training. 2% is accounting, and 2% in janitorial work is their compensation.
Gotcha. So yeah, take us down to the breakdown. I'm very interested to see what that looks at per hour.
Right. So doing janitorial maintenance and, grounds care is you're making $17.40 doing janitorial work, $23.57 doing maintenance and repairs around the office, and then $18.97 doing grounds care and landscaping if necessary.
Gotcha.
For doing bookkeeping and payroll,
right,
you're making about $27.92 being a payroll clerk, and $24.41 being a bookkeeper in that area. With doing your training compensation, being your own human resources clerk, you're making $25.03 an hour.
okay.
Doing employee training and development, you're making $33.69 an hour. And doing human resources is generalist, like any sort of human resource stuff, is $37.32 an hour.
Wow. So really doing all this yourself as a business owner is really, it actually costs you to do
Yes.
everything yourself.
Right. So it's good to look at outsourcing some of this stuff. You could probably, even if you were paying, between the $25 to $30 range for somebody to help with some of these different tasks, you'd definitely be freeing yourself up to do more of your dental work. And as I scrolled down here, your general operations manager, you're making $92.14. So if you can get rid of some of these other tasks, maybe you hire a landscaper to come by, every week or once a month or something to kind of take care of the outside. And you do more your general operations. You hire a bookkeeper or you hire a payroll company to take care of your payroll. Maybe your secretary puts in all the payroll numbers at the end. These are different tasks that you can maybe delegate or outsource to help make it so that, being the general operations manager, you're making $92.14 an hour. And then doing more dental work, you're making $116.40 an hour. So you're increasing your business by actually hiring people to take care of some of these other things for you.
Gotcha. Okay. I'm going to ask you this question because if you don't mind scrolling back up to the 172,000, please.
Yes.
I'm very curious. With that 172,000, let's say, you're a business, you're a dentist just starting out in your practice. Maybe you're 2 years down the road, and you
Right.
see this number. You get your evaluation done, and you see, well, you should be making 172, or let's say 150 at the time. Do you feel like this can deter business owners and say, look, I'm nowhere near making 172, right? I mean, it's
Right.
just been one of those years. So does this send a business owner into a panic situation where they're like, well, so what do I do? Am I going to get dinged because I didn't make 172?
Right. So here's some of the different things that we could do. Maybe you're spending more time doing some of these other tasks. Like maybe you're spending more time doing payroll. Maybe you're spending more time doing training with employees. So these are different things that can change this number. It might be a good idea for you to keep a log of where you're spending your time every week so that we can see where you're really spending those hours and how we can increase those hours. Another thing is that, we do, change a few numbers around, but you're still not able to make it to that salary. What you would want to do is just not take any distributions. If there are no distributions for the company that year, then there is nothing for the IRS to move. So that can keep you safe in that there's no distributions for the IRS to move. You're just taking everything in payroll. The IRS can't penalize you for that.
Interesting. Very interesting. So what is your suggestion here? We have this information, and I think you want to show us something else on this, right?
Right.
Okay.
So so this one doesn't have the draft stamp as the other one did. This is a
Okay.
final copy. So when we finalize all of your numbers after we've reviewed it and made sure that your salary and your time is what you're actually spending, it will give you this additional information at the bottom, which will have a breakdown of your reasonable salary, how we came to those determinations. And then it also will give you a breakdown of the tasks and what type of work you're doing under each one of those tasks. So that if the IRS ever comes back and looks at it, then you have, a breakdown of what different things you're doing. And then this last part is kind of a example of what you could put in your business meetings to help solidify your salary. If the IRS ever comes, you say, no, like as a business, we agreed that this is what my salary is going to be. And that helps solidify it to protect it against the IRS coming in and trying to change your salary.
Wow, that's some amazing. That's a good software. It's really
Yeah.
good. All right. Um, so shift us and take us to the next phase here, Victoria. We have this information. We see how the IRS has changed things and what they're looking to do and what's coming in the future. How does a business owner need to shift mindset around reasonable comp? Because again, this is the third time we've talked somewhere around your compensation.
Right.
There is something to be said about the third time talking about is that this is very serious. So how does a business owner need to look at this information specifically?
Right. Instead of looking at it as a negative and looking at like the tax implications and everything, let's look at all the positive things that it brings to you. It gives you a chance to evaluate your business and where you're spending your time. You might be able to, actually increase your business by outsourcing some of these things and spending your time doing more of what you actually love doing instead of these other tasks. The other thing that you can do is look at the 401k plans in your retirement and how it affects your Social Security. There's so many different things that roll into this reasonable comp audit. Plus, you want to protect yourself against any audits or anything else that could come of not having a reasonable salary. If you're looking to have a reasonable salary evaluation done, or you're not sure if you're anywhere close to where you should be, or you just want to help have extra documentation to protect yourself, please reach out to your accountant and get a reasonable salary evaluation. I'm more than happy to just do a reasonable salary compensation if that's all you want. But definitely protect yourself and make sure that you're doing what's in your best interest.
I completely agree. And I want to thank you so much for taking your time to really paint the picture around the impact of your salary. Again, I keep on referencing these 3 shows because they all have a correlation with each other. And this one really should be that propelling point for every business owner. So I appreciate and we all appreciate the information that you're providing for us. I know you'll have some great information for us next month. I appreciate you stopping in. Again, I know it's that tax season, you got to get all that stuff in. So I
all
appreciate you
good.
taking the time out of your schedule. Yeah, that's it. But no, we're happy to have you back next month and give us some more information and how we should shift our businesses. So thank you as always.
Right. Thank you, Maurice.
All right. We'll see you next month.
Sounds good.
All right. All right, everybody. Victoria was able to provide this information from a business consultant perspective. I want you to think about this. This is an opportunity for you to look at your SWOT analysis. So take this information and look at it as a growth opportunity. Where are the holes missing? What are the numbers telling you? I know solopreneurs, believe me, I completely understand the amount of time that you want to go ahead and try to manage costs by doing it all yourself. But in each of these scenarios, we witnessed how there's a cost associated to doing everything. If there's an opportunity to make that shift, this is the tall tale sign as to not I can't make 172 right now. It's how do I get to that number? Maybe that's the opportunity that we have right now to shift our businesses into the next level. It's where you take a moment, look at the evaluation that Victoria has provided you, and make that move. If you're a bookkeeper only, this is how you connect with Victoria to actually make sure that you can shift your clients in that right direction, because this is the information that they need to know. So again, business owners, don't look at this as information as to attack against the IRS. This is an opportunity for you as a business owner to shift gears. Remember, not just only in this evaluation do you get information, you get to go back to the banks and prepare yourself so that way you can get funding. That way you can set up your 401k, set up your Social Security, and get prepared that way for the future. And so now you're ready for the present and also the future. So let's go ahead and position our mindset around this is a growth opportunity instead of like a warning. It is definitely a warning, but what's the growth opportunity here? And that's what it is. So again, thank you viewers for taking your time out of your schedule. Victoria and I, we actually have to get back to work. So we'll see you next time.